This has been the worst week that I've seen for the weekly dividend ETF account. It is beaten down like crazy, but it's not all bad, and we're going to cover all of that and more in this video. Welcome back, guys. This is Spencer Invests. This is our $1,000 weekly dividend paying ETF account where I put $100 into each of these. We have some extra cash left over. We have 8 current high yielding weekly paying dividend ETFs. That's a lot. That's a mouthful right there. And we're going to track all of their progress and more. I do all this kind of stuff on the channel. I love dividend stocks, ETFs, investing overall in the stock market. Let me know if you guys like this type of content by hitting the like button down below and subscribe if you are interested in this content, because it has been quite the journey, and I'm sure you guys are excited to see the winners and the losers from this challenge just so far. We're on week 14, and I can't thank you guys enough for all the support on the channel. Let's dive into all this data by rolling that intro. As you guys can see, we are only up $29 flat in the account. We're still in after hours now, so it might keep shifting a little bit, but it's been rough. We're going to start with our biggest losers, and you guys already know what I'm talking about. We are talking about the Defiance ETFs, but everything is red. It is crazy. Our cash is up. We're up to $43.33. Once we do hit that $49.50 mark, we'll be buying another share of XDTE, which I'm excited about. The only red we have in the account is YBTC, which is our Bitcoin fund that pays weekly by RoundHill, and now it has been rough. This fund was up 10% last week and is currently only up 2%. It's still the only one positive in the account, so that is something that we should count as our positive. Now, looking at IWMY, let's check this thing out. We're going to go through each of these from the 3 different ETF holders, and we can see Defiance starting off extremely weak, as we're used to. The AUM on IWMY, I think is it up even at 110.41 million? I can't remember if it's a little bit higher or lower. We can see volumes flat. Their dividend yield is 110%, which is insane. And this is what I count as NAV erosion. I know a lot of you guys are going to say it over and over again. It's just a downturn in the market, and we've seen that with the RoundHill funds and the YieldMax funds, but this is NAV erosion through and through. At the best time in the market, when the market was roaring, this was still happening with IWMY. It consistently falls down and underperforms. Now, some of the funds are still green in the account, and I'll show that on our spreadsheet at the end, but this one is not. This one is in the red, and it was a significant loser, and they're really pulling the account down, which is very, very unfortunate. I mean, look at this. Since the reverse split, you can see they literally were at 41, and now we're at 29. It's dropped $12 since that happened, and that was in July. So what, 6 months? Absolutely crazy. Now, the last 4 distributions we can see, we had a 27 cent, a 26 cent, a 30 cent, and another 30 cent. So, I mean, the dividends haven't been bad. The problem is when your NAV continues to fall and your dividends stay the same, you're losing money. You're losing quite a bit of money, that is. So we're going to go into the spreadsheet later and check on this guy, but I don't have a lot of hope for this. I'm kind of over the Defiance funds. Just for your guys' entertainment, I'm not going to sell them out of this account. We're going to keep holding on and seeing how they perform. Maybe I thought there's a chance, because they do a different kind of options call. They're not a covered call. They're a cash secured put strategy, that maybe in a down market they'd perform better. But no, they're still performing terribly. So I don't know what market in which these weekly ETFs perform well. Because, I mean, we've seen a positive market. Now we've seen a negative. We've seen it kind of trade sideways a little bit, and it always underperformed. So I've lost a lot of hope in the Defiance ETFs. But all that being said, let's roll into our next Defiance ETF that is nearly as beaten down, QQQY. On par with how I normally do it, I forgot to read off our averages. So IWMY, $34.61 is our average cost. It's currently trading at $29.70. We're down 14.20%. And total P&L is down $14.73, which is insane. Our market value is down under 90 now. And QQQY is not doing too much better, to be honest. An average cost of $34.37, and currently it's trading at $30.40. We are down 11.54%, down almost $12, and just barely holding on above $91 in market value. Absolutely shameful what we've seen from these ETFs. Now we see an AUM for QQQY of 160 million and a dividend yield of 86.25. We had a little bit of buying, but all in all, it's been pretty flat. These things were trading like crazy before they switched to weeklies, and I don't know why the trading volume died down so significantly, but We see it again here. We know this was kind of the beginning of the end for these funds when we didn't get the good news on the rate cuts like we were hoping. They trailed downward, and they just haven't recouped their losses. And so the problem with these too, same with all the Defiance funds, is when they're down in a good market, chances are that they're not going to be doing good in a bad market. And we continue to see that trend. So I'm definitely disappointed in these. I was pumped when they switched to weeklies, not only for this challenge, but just to see what could happen. And they've been letting me down big time. I don't even know if there's one time they recouped all their losses from paying out the distribution. So all in all, not a fan of the Defiance ETFs. They continue to drop. And this is a steep drop. They're not just like slowly going down like they were prior. And I was like, oh, maybe they'll have some hope if they can pay out a high enough yield. No, they are dropping fast. Last couple of dividends, we had 23 cents, we had 22 cents, 24 cents, and now we have 31 cents. So a high dividend, a really solid dividend from QQQY, but it's not enough to recoup the losses. Now, I'm going to check and see if we are still green on this one. I doubt that we are, but maybe we can be. Now, for the best performing loser in the account, we see WDTE, our last Defiance fund. It's wild to me. This one is down 8.5%, which is, 3% better than both the other funds. So although it is still down, I like this one more. And prior to today, to this week, I should say, QQQ and WDTE were trading pretty similarly. IWMY was always the main loser, and now QQQY just dumped off a cliff. I'm not sure why. WDTE, we have $42.18, and the current price is $38.60. Looking at the chart, again, we see something similar. I blame the last couple of weeks for the downturn in the market. I think we've all kind of felt it. My personal account has been getting beaten up pretty heavily, but we hold long. That's what we do. We're stock market investors. But, yeah, since that bad day, it has not come anywhere near back to that kind of average trading price. Now, we can see AUM a lot smaller of 75 million and a dividend yield of 52%. So, why is WDTE doing better than the other Defiance funds? Well, the yield is lower. They're not paying out as much. And on top of that, it's just not dropping as much in price. I don't think there's ever been a point where the other funds were doing better than WDTE, the other two Defiance funds, I should specify. So if I was going to buy one, it would be WDTE. Am I going to buy them? Definitely not. Definitely not, and definitely not in this market because they are just not making the cut. So do what you will. If you like the Defiance funds, let me know in the comments. If you hate the Defiance funds, let me know in the comments, especially because I am gaining, my anger is growing for these funds, mostly because they're dragging the account down. A lot of the other ones have been doing so well, especially YieldMax, and these ones just keep pulling the account down. We should be positive by quite a bit now with just the other funds, but we're not. We're slowly getting drained by these funds. That being said, we have had some rough times for some of our RoundHill funds, and we're going to go into those ones right now. Starting off with our main loser from RoundHill, RDTE, which is crazy. It's down 9.4%. It is being outperformed by WDTE. So before you go slamming all the Defiance funds, it's not all of them. It's just, it is kind of all of them. RDTE is just doing terribly currently as well. So we can see an average cost of $44.36 and a current price of $40.20. Oh. Yeah, the last time I filmed this, I was like, oh, yeah, we're doing pretty good. It's kind of evening out. And then, boom, slam down even farther. So, besides crying myself to sleep at night, I'm just going to still hold on to these ones. RDTE, I have it in my personal account, and that's why I may be a little teary when talking about it in this video, because I have a lot more than $100 in there. I'm not rich. Let's make that very, very clear. So losing any amount of money in my own, investment accounts, it's tough. It's tough. I'm 27. Maybe I'll get there when I'm 70, but who knows? So still, it's just been tough. It's been tough for all of us in the market. We're together though. We're doing all right. We'll make it out. We see it has an AUM of 174 million and a dividend yield of 13%. That's not true. It's roughly around 40% last time I checked, and it just can't keep up because it hasn't had a full year of distributions. Volume's been roughly the same since this crazy sell-off period, which isn't good because we want a lot more buying to happen. And the last four distributions, we had 26.5 cents, 27 cents, and then 60 cents. It paid out a really nice 59-cent distribution, and now we're back down to 20 cents. So we dropped pretty low. I think we were planning on this. I think based off of taxes and the end of the year stuff with these funds, they paid out some nice distributions, and then they were going to pay out some lower ones, like we've seen. At least I know that with, I think, QDTE and XDTE. Someone mentioned that in the comments last time, which I really appreciate when you guys do that. I don't know everything about these funds. There's a lot of them now. It's hard to keep up. So I really appreciate when you guys give me feedback in the comments. But all in all, not pumped about RDTE. This was supposed to be like the golden child. It was supposed to be great. The dividends were supposed to be better. Our return was supposed to be better. Maybe price appreciation was going to be less because it's higher risk. But so far in the markets that we've had it in, it has been underperforming. I mean, at the beginning of the challenge, it was doing great. It was one of the highest earners. I think at one point it was like in number 2. And now we're in number 3 from last, which is devastating. So I don't regret buying it. We'll see how it does. Maybe they can turn it around. Until then, let's jump into XDTE and see if any of the OG weekly paying RoundHill funds are holding up. It could be worse. We're down 5.4%. Our current price is $49.49, and we bought it for $52.31. We only have 2 shares. Like I said, we will buy another share if we get enough in our distributions over the next couple weeks to buy another share. Until then, I'm saving $100 in cash for if we get another weekly payer soon, because we're supposed to. I shouldn't say soon. There's rumors of it happening. And by rumors, I mean people on Twitter are saying it's going to happen. So it probably won't happen, but still, I like to dream. So it's in there, and that way I can't spend that money on something else, like my therapy, as the market continues to fall. So with XDTE, we'll go to the 1-year chart, and it has just taken a crazy drop. We've seen drops like this kind of before, but they didn't have the longevity that we're kind of seeing. We've seen a couple day drops, but since that rate announcement came out, this thing they haven't been recovering. And I'm not sure when they will. We might be going into, guys, I'm going to say it. I'm not a stock market predictor by any means. We might be going into a little bit of a red market. We've been blessed. We've had green for a long time. We've had fun. We've made money. And now we might have to hold off a little bit. But with that comes new opportunities. Never forget that. We are investors. We can do it. We will survive. I'm telling me that more than you guys. So we can see AUM of $313.65 million and a dividend yield of 21.8%. It's actually a little bit higher than that. Again, I'm not sure why the Moomoo yield is so low. It's usually, I think the XDTE, QDTE is around 30. I think XDTE is a little lower, maybe 26 to 28, and QDTE is like 32. But don't quote me on that. I have videos on those if you are interested. They're over on the channel. You know, I'm not happy with the current performance of XDTE, but look at the volume. The volume has just been continually increasing. So people are still buying, especially at these lows. People are taking the opportunity. And now this is not financial advice. I'm not telling you to do it. I'm just telling you what it looks like people are doing. So we can see the last 4 distributions. We had 64 cents and then 60 cents, 61 cents. A huge run for these two. These last couple of distributions have been insane. They really helped keep this thing in the green. I think it might still be in the green. And then we had 33 cents. And then we had 19 cents. So it did have a little bit of a fall off. 19 isn't the lowest that we've seen, but they trailed off a little bit. And like I said, people in the comments called that out because it was the end of year tax stuff. You know, people that are a lot smarter than me are making these calls. And so I'm okay with it. And so all in all, XDTE, not terrible. I think it's holding up kind of nicely, to be honest, for the account. I think it's holding up for the market that we're in. But who knows? If we have a few more months of this, it's going to get rough. It's going to get rough. And it's apparently going to get rough fast, apparently, with what we've seen. So let's go into our second to last RoundHill fund, because now we have 4. Let's check out QDTE. All right, so not as bad as I thought. Down 6.82%. This one also cuts pretty deep because I have quite a bit of this one in my Roth as well. Just for full transparency, I own all of them except for the Defiance funds and YBTC are all in my Roth account. So when you see these numbers red, just know that my account also red. And the only thing worse than my haircut is the down market that we are seeing apparently. My haircut will get better, guys. All right, it's the day after. I just got a fresh cut. It's all frizzy. The curls are gone. They'll come back. Give it some time. I know you guys were thinking it. I had to bring it up. Anyways, back to the important stuff. QDTE, average cost $42.39 at a current price of $39.50. If you guys comment about my haircut, I'm going to delete it. My mom cut my hair. I'm not joking. Okay, back to it. I keep getting distracted. But I watched my recording. I looked at my haircut, and I was like, I got to say something. Anyways, Disappointing. We're down a little bit with QDTE, a little more than XDTE, but we usually would anticipate that with higher yield and less or worse return. Huge AUM, 686.5 million, and a dividend yield of 33.96%. That one's probably pretty accurate, about a 34% return. In fact, it is, because I just did a video on QDTE, which I'll link at the end of this video, where the return was about 34%. And I was happy with that. And that wasn't counting the discount in price that we've seen recently. Let's check the last couple of distributions. We have the big ones. That was 87 cents and then 80 cents. And then we had just under 30 cents and now 18 cents. So similar to XDTE, similar story. I'm not going to repeat all that. But again, look at the volume, guys. We have seen a lot of volume all the way since August. Sure, there have been red days, some huge red days with a lot of selling. But all in all, still doing all right. And I'm happy with that. So not too much to say about this one. I'm still going to hold it. I'm still going to hold it in my Roth as well. I'm not saying you should. Sometimes I think you guys should do the opposite of how I trade to make money, but it just depends really on the week. So let's go into our last RoundHill ETF, our newest to the account, YBTC. The only green in a sea of red. YBTC is up 1.95%. Our average cost of $48.75 and a current price of $49.70 means we are up $1.90. I know, I'm loaded now. We have 2 shares. If I buy a share of XDTE, I will then put all the money into YBTC, slow and steady as can be. I don't know why that rhymes so much, but YBTC. I'm happy about it. I don't love the name. Is that just me? It's just hard to say. Maybe because I say it too quickly or too many times, but still. So we have our second weekly. No, we have our first weekly payment. So our last payment was large because it was probably still, I don't know, carryover from the monthly. Who really knows? We've seen it kind of get cut in half with the distribution, but we can see AUM of 94.82 million, still larger than WDTE, which is funny, but still like what, a sixth of the size of QDTE. Dividend yield of 46.87%. I think volume has exploded with this one. So we have to talk about this. It switched to weeklies, and so volume exploded. Also, there have been some really large channels talking about this one. The Dividend Bull, who is one of my favorite YouTubers. I watch nearly all of his videos on his investment strategy. Very entertaining stuff. Go check him out if you haven't before. But he put a video out about all the best RoundHill ETFs, and this one was on there. And he shouted out that it paid weekly, and so I think a lot of people may have moved into this one away from funds like BITO. And there's a few other ones too, but I can't even remember them all because, again, they're hard to remember all the names. But I think that might have caused some movement, and maybe people are like, oh, it's weekly paying. That's really cool, and it's Bitcoin. It's everything I'm looking for. So nothing too crazy. We saw the last dividend, which, again, was, I think, partially because it was not weekly yet. We saw a 1.6, and then we saw 1.03, and now we have 53. So I'm not going to use any of these as a baseline because, again, I don't know when they switch to the full weeklies or how that works. If you guys know, let me know in the comments. I'm assuming we're going to get somewhere around 50 cents from here on out, which would be good. That's a pretty high dividend compared to some of the others that we've seen. So I'd be happy with that. All in all, not bad by any means. And again, there's not a lot of history on this one yet as a weekly payer. So only time will tell, but it has held up ever so slightly with this market of red, and Bitcoin did pull back a little bit. If you guys aren't into the crypto game, which I'm terrible with crypto, but I'm learning slow and steady, but it is climbing back up the last couple of days, which I think is why we were so red, but hopefully it bounces back a little bit. Now let's go to the shining star children of the account, the YieldMax ETFs, who I keep falling more and more in love with them. I just think that they are insane funds. Insane. So we're going to check both of those out right now. We'll go with the fan favorite, YieldMax. We have an average cost of $17.58 and a current price of $16.40. So they are red. It is in the red. It's down 6.73%. And I looked at this on my Roth IRA account today, shed a single tear, and then went back to work making money that I could lose in the stock market later on. So total P&L down $6.40. We now have 5.4 shares. So we're slowly gaining, slowly getting up to another extra share just purchased off the dividends, which I think would be great. If we can counter NAV erosion and just make money and buy more and more shares, it really is going to show the power of compounding interest, which I'm excited for. It's going to be a while. It's going to be a while. If I invested $1,000 into each of these, that would be great. But if I had $1,000 to invest in all of these, well, I'd have a better haircut. So we can actually see AUM has surpassed QDTE. We have had some buying. We can see an AUM of 724 million and a dividend yield of just under 50%. Wow. This has jumped. It was not a 700 It was below 700 AUM last time. So really, really quite impressive. We see the last couple of dividends, 12 cents, and then we had 14 cents, and then 24.5 cents. And now we have a weird mix. Oh, yes. Because the markets were closed some random days, I don't know how they calculated this at all. We had a 14 cent on January 8 and an 18 cent on January 3. Now, interesting. Very, very interesting. I think they paid out combined. I don't know. We'll find that out on the tracking spreadsheet because I have it all compiled into one. Still, really kind of a funky week. And that's one thing, too, we have to note. We're probably going to have less money in our distributions for all of these because they lost a couple of days from Christmas, New Year's, and the Memorial Day for the deceased president. We lost some trading days. That's just the way it goes. If you're not trading, you can't make the money. They can't make those 0 DTE calls that day. So, not bad. Last Thursday, I think it was Thursday of last week that the market was closed. So, all in all, interesting month. We've had it tough. We've had it very, very tough. So, we'll see when we pull up the spreadsheet, it'll give us a little more insight into this. The yield has been good. The AUM continues to grow. So, I'm surprised this one is as beaten down as it is, and we've seen some good volume, so who knows what's going to happen in the coming weeks. Let's jump into our last fund, and my personal favorite, YMAG. All right, we can see YMAG, average cost of $19.19 and a current price of $18.79. We're down 2.08%. Again, we're almost to the halfway point. I'm hoping by next week, but it'll probably be 2 weeks. We'll be at 5.5 shares. That's really going to be an exciting time for me because, well, I'm a nerd. So moving into our detailed look, we can see AUM of 351 million and a dividend yield of 38, just under 39%, I should say, and crazy volume. Look at this volume down here. Boom. People are buying. People are also selling, but people are buying. And so increased volume. We saw it on some of the red days. A lot of selling happened. And so I'm hoping we see some green days pick up. We see some buying and the market flips back to the green, which I love. I'm sure you guys love it as well. But last couple of dividends, we can see it's 16.8 cents. And then we had a low one at 6 cents. And then we had 17.4 cents. And then again, we had a split of 15.8 cents and 31 cents between January 3 and January 8. You know, I'm going to have to adjust the spreadsheet because I don't think I included both of these. But I will. I will fix that before we move to the spreadsheet. This is a little bit tricky. And I'm very interested in what happened. Maybe this was the old one. Maybe January 3 was last week's. But I don't know. We will find out, and I promise I will get you the most clear data that I possibly can. All in all, YMAG is still my favorite. YMAX was outperforming it for a long time. The last couple of weeks, YMAG has been doing better. But I think YBTC might be coming in pretty soon here near the top because it is still green on the market value, and it's still paying some nice distributions. All in all, this account has been really, really fun. It's been fun to watch, and I'm really excited for the ones we're going to get in the future. Now, just so you guys remember, YMAG and YMAX, the distribution schedules are different. They're not like the RoundHill 0 DTE calls. They own the funds they own the YieldMax funds in a cycle that allows them to pay out weekly, but they don't all pay out every week. So it's really messy, and I've explained it a lot, and I'm somehow getting worse at explaining it every time, but it's not the sky's falling when we see a 6 cent dividend. It's pretty common, about once a month or once every 5 distributions or so. So no complaints there. Let's jump into our spreadsheet and see what is making me money and what is losing me money, i.e. the Defiance ETFs. Oh boy. Usually the weekly dividend payments tracker brings a little bit of happiness to my heart. Sometimes it makes it worse. And this might be one of those times. I am surprised though. The Defiance ETFs did do pretty well with their payments. We had 91 cents from IWMY, which is very, very solid. From QQQY, we had 93 cents, which we haven't seen this for weeks and weeks and weeks. So that's a pretty good distribution. I'm happy with that. Very, very happy with that. We haven't seen 90 since, week 6, 7, something like that. So, and we're on week 14. WDTE, 47 cents. No complaints. Maybe a little bit low, but not anywhere near the low of 37 cents. So, still doing all right. We're doing okay. I do not understand how they are paying out consistently solid dividends, but dropping the NAV like crazy. Like, you got to pick one. Actually, no, you don't. They are picking one. That's the problem. They're picking dividends and not NAV. You need a little bit of both. WDTE, again, is probably the closest you're getting to both. But IWMY and QQQY are still paying out high dividends and still losing a lot of money in the NAV. Then we go to QDTE. Remember, we did purchase another share of this guy. I can't remember where. Somewhere around December, early December, I think. Maybe late November. And so the yield it stayed consistent, but our amount has picked up because we got one more share, which is good. I've been enjoying that one. Even if it is red and we are down on that purchase, it's still fun. It's still fun to see the drip actually working and all the money we're making going right back into the account, hopefully helping it grow, but recently not. We have XDTE, 38 cents a share. Not the lowest. Remember, we had a 31 cent, a 37 cent, another 31 cent. So it's not terrible, but I want it to start climbing. They had some insane payouts, like I said, in late December, so I'm not complaining about that one at all. Then we have RDTE, 62 cents. Now, we did purchase an extra share of this one, so this is pretty bad. This is pretty low. And maybe they're just rebuilding. Maybe it's the same thing that we saw with the other funds from RoundHill. And so I'm not going to judge it too harshly on that. We'll see what next week holds. We really got to wait until we get through these weird break in the market days and such. YMAG, 86 cents, which is pretty solid. It's pretty solid. We see the cycle over and over. We have the 31 cents when it drops for depending on what's paying out. Then we have a couple good weeks, and then we have another 30-cent one. So you can kind of start to see it. It's pretty cyclical, and we see our lows kind of getting higher with a low of 27 initially, and now our last low is 31. So buying back using that drip is actually working out for us quite nicely. Then we have YMax, and we can see a 75-cent dividend, which is not bad. This is going right back into YMax itself in the account, purchasing a fraction of a share for us, but not terrible. Not terrible at all, actually. Quite maybe on the lower end, but not as bad as we could see. So, because the markets, again, have been tough. So I'm happy with that one. Then we have YBTC paying $1.07. So our largest dividend on our $100 investment was YBTC so far this week. And again, some of these QDTE and RDTE have over $100 invested. So it still outperformed them with the yield. So it's probably got a pretty decently sized yield. I'm really happy with this one, and I hope it doesn't just keep falling like the other ones have. It is the shining light in the portfolio, as you guys know. And so what I'm going to do, we're going to jump into our positions tab. Just so you guys know, if you become a channel member, you have access to all the spreadsheets I use on the channel, and it helps support the channel, helps me do these challenges. But to be honest, you guys watching the video is more than enough, and I really, really appreciate it. So don't feel pressure to do it all. It's just for if any of you guys want them. Let's jump into our positions tab and find our winners and our losers of this week. All right, everything is updated. We now have 5.45 shares of YMAG and 5.4 shares of YMAX in the account, updated with their current prices. Here's the bonus. Here's the thing with drip and compounding. Because YMAX is 6% lower, when it reinvested this dividend, it brought our average cost down by 1 penny. So big baller plays. I'm happy with that. It is cool. All jokes aside, it's cool because you start buying things at a lower price, and if they go back up, now you've made more money on the price return and the distributions themselves. So no complaints there. We're still sitting on the same number of shares for all of these. We have, XDTE is our next one to buy another share, and then probably YBTC. Oh, man. Look at that red. Look at that red. So we have our total return market-wise. Okay, so we have the total return market-wise just on our initial amount, and then we have the money with the dividends included as our total return. So we still have a lot of green. Believe it or not, even with how ugly the Moomoo account looks, we still have a lot of green. Our worst returner so far is IWMY. It's down almost $16. And behind it, I hate to say it, is RDTE at $13, which is crazy. Now, the insane part, too, is RDTE being down $13 it's down less than $2 with our total return. Wild. So our big losers are only RDTE, IWMY, and QQQY that are really hurting the account. Now, WDTE is only up 1.5%, but QDTE is up 2%, and XDTE, or QDTE is almost 3%, XDTE is 2%. So they're all pretty close. There's no real home run from any of the funds. We have YBTC is back down to being up just under 3%. It was at 10% gained last week. So that one is a bit of a bummer. Now, we have our winners. We have our crazy, crazy winners. We have YMAG coming in at 9.84% return still. So we are still positive, just under 10% in 14 weeks, even with the market pulling back. And with YMAX, we're still up 8%. We are down 6% with almost 7% with just the market return, but the yield, the dividends have been so insane, it's able to keep up with it, which I'm really, really happy about. That's what I like to see. I like to see even in a red market, you can still get some nice dividends, even if you're not making a ton of money, because you're not going to always make a ton of money. But even in a red market, you're able to kind of recoup those losses, buy down some shares, dollar cost average, and boom, you're not doing too bad. So sliding all the way over, we can see our portfolio allocation, our biggest one now being RDTE, and then QDTE because of those extra shares purchased, and our smallest being WDTE. Not too bad. Now going all the way over, we can see our total dividends received. So our top our top payout for dividends is YieldMax at $14.92, which is wild. It has been paying out so much in dividends. And next we have YMAG right behind it at $13.86. Now we've seen YMAG and YMAX consistently, outperform. They're going neck and neck. Those two are always together. And so far, now that RDTE has fallen off like crazy, those two have been just a leg above everything else by a pretty significant amount too. So I like seeing those two compete. I like to see them like racing who's going to win next week. And so far, we have YMAG winning, but YMAX was winning for a couple months in a row. So I'm happy to see it. Our lowest payout of dividends so far, WDTE, but again, it's outperforming QQQY and IWMY. So the NAV is a lot more stable with WDTE than the other two Defiance funds. And for RoundHill, RDTE paid out $11.42 so far. QDTE paid out $12.31. So that's pretty wild that QDTE is well outperforming RDTE with more distributions paid out. I should say more amount in distributions paid out and a better price return. And XDTE we figured would be lower in the dividend amount paid out, still at $8.27, but a pretty decent return, better than both the other two. So all in all, pretty fun week. I hope you guys enjoyed. Let me know what you think down in the comments, and don't forget to like and subscribe so you see next week's weekly update on our weekly dividend ETFs. Thank you guys so much for watching. I hope to see you in the next one.